Up next is a panel discussion on what could be the playbook for creating India's next EdTech leader. We have Mr. Ashwin Damera, co-founder of Emeritus and Eruditus. Mr. Damera is passionate about making quality education accessible to the next generation of leaders across the world. Next, we have Professor Chandrasekhar Sripada from ISB Hyderabad. He combines vast practitioner experience with deep academic interests in teaching, research, and scholarship. Professor Chandra was a C-suite executive with large public, private, and MNC firms and held the role of the CHRO for more than 25 years. Our third panelist is Mr. Vijay Thadani. Mr. Thadani is the Vice Chairman and Managing Director of NIIT Limited and co-founder of NIIT University. As the co-founder of NIIT Group, he has built an organization that is recognized for its visionary role in bringing the benefits of information technology, both as professional skill and as a learning tool to the masses. This session will be moderated by Mr. Ravi Garikipati, the co-founder of Davinta Finserv and a software industry veteran. Prior to this, he was CTO and head of engineering at Flipkart. As a technology leader and product enthusiast, he brings vast experience in massive scale cloud infrastructure and platforms, big data processing systems, machine learning platforms, and decision-making systems powered by AI. May I request the audience to type in their questions in the chat box. They will be answered at the end of this session. Over to you, Mr. Garikipati, for further deliberations.
Thank you, Neha. I really appreciate for the kind introduction, and participants don't rub your eyes, and I might come across as a hardcore technologist going by the introduction that Neha had given. I'm an avid entrepreneur, been a serial entrepreneur myself, though technology is my core competence, and I'm extremely pleased and privileged to be amongst these three accomplished eminent personalities. They come from different walks of life. Hopefully the next 30 minutes will unfold into really exciting and engaging conversation, and some of you are participating will take something back home and reflect. Just a quick 1 minute reflection. Given I'm an entrepreneur and a technologist, I keep looking at India and the kind of problem statements that will throw at entrepreneurs, and I invariably come to three massive problem statements that are of massive importance and relevance to us at scale. Those are in no particular order, financial inclusion, quality healthcare, and quality and affordable education at scale, right? So all three are very close to my heart. And while financial inclusion, fintech has been there for some years now, it's proliferated quite a bit. A lot of entrepreneurs have embraced it. EdTech has been a phenomenon in the last 3-4 years, mostly in the last 2 years. And I think the pandemic has done its bit to sort of allow this particular phenomena to gain traction. We clearly saw some momentum and tailwinds. And we also know there are some distinct advantages the EdTech will have over conventional learning, given the fact that technology can democratize access to what I just talked about in a few minutes ago, affordable and quality education at scale. And so it's a very hot topic, and I actually applaud NIIT for putting this event together, helping budding entrepreneurs to sort of come together and learn something from veterans such as these three eminent personalities. With that, I'll quickly get into our panel discussion. Vijay, I would love to tee off with you. You've been a doyen of education. I would say transformative education or alternative learning in India. I think NIIT has been at the forefront of revolutionizing imparting education around information technology. They've done it for 4 decades. You've seen many revolutions, evolutions, cycles unfold, and NIIT has been there like a rock of Gibraltar, doing its thing, consistently for 40 years. So my question to you is, what is your take in terms of how EdTech ecosystem is evolving? I know a lot of folks have taken different approaches. What is your take? And I also want to hear a little bit about your particular inputs in terms of what should be the foundational building blocks that need to be considered for building future EdTech startups. And yeah, largely let's tee off with that. I know it's a generic topic, but we'll get into details. But I want to understand your thoughts to begin with.
Okay, thanks, Ravi. Thanks, and thanks for having me here. Really enjoy seeing Chandra once again after a long period of time. The number of hair at the head have not changed too much, though. And Ashwin, great to meet you. I have heard many great things about you, so it's a pleasure to have you here as well. While we would have loved to do this session in the background that you see in this picture, I just brought the background since we couldn't get you to that place. But that is the university which is talking about this. So Ravi, thanks for all the good words that you said. I just wanted to go back in history 40 years ago. And all that you said reminds me of a saying which you remember Osborne, the first computer, portable computer. He used to say pioneers are heroes with arrows in their backs, right? So anybody who starts a pioneering effort actually is going there. And we are talking about a time when, and I think Raji also alluded to that, which is still prevalent, is that the social credibility and the social acceptance of education coming from a private company is a very difficult task. And why I'm referring to that is because that also is our inputs to the playbook, and I think those who are successful have actually demonstrated that. The second was, at that time, first, there was no social acceptance. So you had really had to prove why it is important that you should actually be given a chance to sit on the table at the first place. The second was that you had no way to get any employees because there was no sector. So you were picking up people who were coming from elsewhere and retooling them for this sector. And really, you have to work very hard to prove to people why it makes sense for them to join this company, and that too with where the society will have such low acceptance. I remember a case in point, we hired people from IIM Bangalore, I remember that, 1983, and the parents of those guys who were going to join us came to have a look at the office to see whether there is actually an office or what exactly are they joining them for. So that was the level of employment at that time for you to add a team. And then there was no risk capital. You know, today you get venture capital and you get multiple forms of funding. You had to only depend on debt. So in that ambience, when you built the playbook, and that's what I'm talking about, it came from, I describe it to all the newcomers and people who join NIIT also, I describe it in three very simple words. There is a physics of a problem, there is a chemistry of a problem, and there is a math of a problem. The physics is, for you to gain acceptance by your customer, you have to deliver value. You have to deliver value which is easily measurable, recognizable, and the outcome is something that can be demonstrated not once, but again and again. So it's sustainable value creation. That is the physics. So whatever is the idea that you are progressing on, if there is no sustainable value creation, and I think Sanjeev also alluded to that, you don't have a starting point. The second is the math. For you to be able to get capital, and it's not free capital, you have to give a return on that capital. Therefore, you have to work backwards from a return on that capital. And I think Sanjeev gave very interesting tips of, 80% gross margin and stuff like that. So if you don't have intentions of making money, And there's another term which I use, saying that is the value that you are creating, is it for trading your company or is it for building value in the customer's mind, right? I think there is a subtle difference. So I think in that context, I felt that the math is very important. And the chemistry is because organization will be made up of people. And if these people are not like-minded and don't have a shared vision and don't have an aspiration which guides them in the same direction, chances that you will have a successful venture will be very low. Now, move many, many years later, I see that these principles still remain valid. The physics remains valid, the math remains valid, the chemistry remains valid, but the situations that happened in the last few years actually gave a false impression of math, which said that the money is just available. Do what you want to do with it. Value is not equal to the value that you deliver to the customer, but value is the valuation that you drive or the volume that you drive. And even if you deliver value, it is based on a single instance of having delivered value, not a sustained value. So if you don't follow this, then the math will not fall in place. And chemistry is required for making all these things happen. So the gaps which I see now in the changing landscape, we've come a long way. I mean, we have 7,000 plus EdTech ventures today. We have come a long way. We have a vibrant marketplace. In EdTech, there are a large number of people coming. The opportunity is huge. Earlier speakers have talked about it. But I think we need to keep these fundamentals into place. The physics of the situation, the math of the situation, and the chemistry that the team will drive on. So I'll pause here just to see if I'm answering part or most of your question.
No, absolutely, absolutely, and very well put, succinctly put. I think your physics, math, chemistry analogy, no matter how many times I hear it, it's sort of I'm enamored. It really drives the point home, and very well put. And I do have a few follow-on questions, but I'll come back to you, Vijay, and over to you, Ashwin. And you're the one, been there, done that, prove to the rest of the world that you can build a very sustainable, scalable, and profitable business, EdTech-driven business. And you're not talking from a theory here. You're a practitioner. You've been at it for a good length of time. It is here to stay, and it's growing really well. A question to you, Ashwin. Once you really have an idea and you think you have a target segment, and you're I wouldn't say you have found your product market fit. I think that's a journey in itself. But most EdTech entrepreneurs that I've interacted with, and I do believe it's a very pertinent question, is this whole dichotomy and a dilemma, whether whatever they're imparting, would it be purely online, or is it offline? Is it there is some modicum of a hybrid approach here? That's from the delivery standpoint to better manage the outcome that you're promising. And the second thing is even the customer acquisition, right? There are pure play B2C EdTechs out there, doing the whole hog, trying to acquire customers, but then they're quickly realizing the CAC is out of whack, and they're now going down the path of exploring offline channels as well. So there's an omni-channel angle there in terms of customer acquisition. There's a hybrid model in terms of delivering the content. So how do you strike the balance? What's your guidance, recommendation to budding entrepreneurs out there as they embark on this journey?
So I can give you a kind of a macro view and a macro view. At a micro level, I think there is no one answer to this. There are so many models possible, because you will see large successful offline players, you will see large successful online players, and you'll see a lot of successful hybrid players. So as an entrepreneur who's about to start, I would say find the product market fit, or find the student pain point. And that's the most important thing. The delivery method must then suit that pain point, right? Now, if you're teaching a child, let us say the child is 5 years old and you're teaching them, say, piano or something, there's only that much that you can do online. and really maybe classroom and very small group, maybe one-to-one is the way to go. On the other hand, if you're teaching a very senior executive, maybe something around, say, Python coding, etc., maybe a lot of it can be done online. So the answer will depend based on the use case. But at a macro level, if I think about just India as a country and the need for skilling and higher education, we focus on that segment, the numbers are as follows, right? We have approximately about 40 million students in higher education today in India. And that translates into a 27% gross enrollment ratio. Now, what that means, that number gross enrollment ratio, is about 27% of the kids who finish 12th grade are going into college. To put it in comparison, that 27%, if you look at the US, is 80% gross enrollment ratio. UK is about 60%. China is about 40%. India is at 27%. So if, as a country, as a nation, if we all have to come together and say, look, there's a massive young population, this demographic dividend, we have to somehow realize it, else it may become a demographic curse a few years down the road. We have to see how this gross enrollment ratio moves up from 27%, maybe in the next 10 years to at least 40%. Of course, we would love for it to be higher, but let's be realistic. In the next decade, maybe that's realistic. So from that perspective, if you say, look, what does that mean? If 27% equals 40 million, right, and we have to move it to 40%, you're talking about nearly 20 million new seats in higher education. Now, if you look at that lens, it's very difficult for us to build those beautiful campuses that we can see in the background to the scale of 20 million. Because not just you need the hardware, you need the intellectual capital of the faculty in that classroom with 30 students, 50 students. But if we could allow that same intellectual capital to reach more students through online or through hybrid, but effectively, and I like the point that the earlier panelists made about effectiveness, that's very important. And I think Vijay mentioned that. Then maybe you find a nice gap. So my point is, at a macro level, for India as a country to move forward, we have to look at how do we expand existing intellectual capital capacity. Online and hybrid will be very large models, but not the only model. And let's be very clear about that. I don't believe there's one size fits all, or there's one model that's superior. That would be my submission.
Yeah. Just an extension, Ashwin. I know I'm sure you have a perspective there as well. Anything that you particularly found very effective in terms of customer acquisition strategies, and while the delivery could be hybrid, and it's not a one size fits all approach. You very eloquently alluded to that point in terms of acquisition, because there's this rage and there's a never-ending debate. The pure online focused EdTech companies, they are incurring a very high customer acquisition costs, and there's no business model and what have you, right? So what's your take, and what have you learned? Anything that you can share with the budding entrepreneurs?
Yeah, I think you're right. There is a Facebook and Google and maybe LinkedIn tax that I think EdTech pays, but many other startups also pay. Because in the early stages of a startup, once you figure out product market fit, you want to scale very fast, right? And you can open up your budget cap on a Facebook or a Google, and those leads will come in, those visitors come in, and it's intoxicating. And suddenly you can show all of these growth numbers. Investors like it. You feel very happy about it. But then what we realized, and if you look at the last 3 months, 6 months, is that the sustainability of that is definitely a question. In EdTech broadly, Ravi, there are two kinds of models, right? One is a very high ARPU purchase. So suppose somebody is doing a degree program for 2 years, and maybe they're only going to do that kind of a master's degree once in their lifetime, right? Or a skilling program, maybe once in 3 years, 4 years. Versus say somebody's doing a coaching class and they'll come back, 3 times a week, maybe for 6 months, 1 year, a kid, for example, extracurricular tuitions, etc. So either you are in the very high ARPU business, which means you got to make money on your first student acquisition. There's not much repeat, or you're in this repeat business where you can pay a little higher and you can continue the repeat. But nevertheless, for both of these, we are finding for sure that EdTech as a business, if you run it well, should be a very profitable business. The gross margins are there. You typically collect from the students first, pay institutions or tutors or teachers later. But when you start scaling beyond a certain point just through digital media, then you start hitting those inefficiencies of acquisitions. And then a lot of what companies have done is to pivot to B2B models, whether that is going after corporates or institutions like, selling to schools, etc., or finding these channel sales partners to augment that. And especially in India, that's a large piece of the pie. So I would say that, look, I do agree that if you're looking at pure B2C, there may be a certain cap, to which you can acquire, unless, and maybe I'm giving a segue to Chandra's interest, is if you find a way to have your students come back, because the quality of your education, the quality of the teaching, the quality of the learning outcomes, not just learning outcomes of somebody finishing, but also career outcomes in many cases. India is a very large market of word of mouth, right? If one person in your batch has got a great job, 10 people will hear about it, the family will hear about it, right? So the one thing that I would say is that if you have that flywheel, then some of these inefficiencies of scale from B2C marketing goes away. Otherwise, for companies that don't have it, they start going more into B2B to cover up for their lack of the learning outcome.
Excellent. Very well articulated, Ashwin. Thank you. Thank you. Now over to the chemistry part. I'm borrowing your line, Vijay, the chemistry part, the people. Chandra, we can't help but ask you, this is an important and integral part of any startup. But unfortunately, it's an afterthought, and most startup founders do a catch-up act. That's people, right? Of course, entrepreneurs are very driven and passionate about the problem statement, and they'll give everything to get to that promised land, and they're deeply motivated. But they themselves cannot do it, and they have to start focusing around people and the culture, and how do you actually create a environment where you attract good talent when you haven't necessarily raised a whole lot of money, and with whatever limited resources you have, how do you actually get them to align to the problem statement and train them, not necessarily in their own core competency, but other adjacencies and so on and so forth. So there's a lot that we can do from a people standpoint, but like I said, it generally ends up being an afterthought. And what would you recommend to the entrepreneurs out there hearing us out in terms of their journey when they're starting out a startup? Not necessary for EdTech, but in general. But it's a vital cog in the wheel.
Thank you, Ravi. So first of all, thank you, Raji, for bringing me in. After years, I'm seeing Vijay, and I'm so delighted about that. I could not be an entrepreneur. That's why I remained an employee forever, including now. But I had the privilege of watching entrepreneurship through my life from close quarters. And what I had asked in the very formative years of my life from Vijay and Raji continues to resonate strongly with me later as I research into the topic and see what successful entrepreneurs across the world have done. There's a lot of boxes that they have ticked, not now, 40 years ago. And there's a lot to learn from them. So what they did is exactly the opposite of what you said. And there are many more. It's not just Vijay Raji who have done it. Ashwin in his time in a different era doing different things, I'm sure will agree with me that for them, people agenda on the playbook is not an afterthought. It's actually a before thought. It's actually a first thought. And I know the pains that some of these entrepreneurs take to make their organizations attractive enough for people. So let's not interest that people understand this in more operationally, how to execute these ideas, because everyone in a conference like this will agree people is important, people are our greatest assets, but finally on the books they are our liabilities. So the issue is that what do we do specifically? So let me tell you what I've been teaching a little bit to these startup entrepreneurs and mentor a few of them. What I saw, the first problem is a belief system problem. Somehow there is this belief that if you are small, just about raising funds, nobody knows you, you are in pre-seed or seed and whatever A, B, whatever stages you are in, you are not good enough, big enough, all the big employees will go to the big companies. I know it is hard, but please understand there is a self-selection theory. So what happens is the most unattractive man and a woman also in the world, if want to get a life partner. Exactly how that happens, at any stage, there will be people who would like to join you and you would like to have people. And it's just a question of how do you make yourself attractive? for which the issue is you need to have, if you want to think of a product market fit, should you not also think about a company employee fit? And if you think about that, should you not define a value proposition, much like how you would define for the products? So I guess the answers are within replicating what we do with finance and marketing. The same calculations and same, physics, I guess, work even in the people issues. You need to first define what jobs you need to have, a clearer understanding, not just copy. You're just starting and you want to be like Amazon. It's not possible. So I would strongly recommend that entrepreneurs take a very realistic and phased and evolutionary approach to their people planning and scaling, but not too much of an evolutionary approach to the people philosophy. That needs to get right from day one as to how would I treat my people, what would I expect from them, how would I deal with them, and be able to articulate it and present it in a manner that others can see and resonate with you. And if all other parts of your business idea, market presence, operational success start showing early signs of success, many people who want to learn today, in fact, the struggle we have teaching the old-fashioned career-oriented education in business schools is that a lot of the youngsters do not want to join formal employment. They actually want to be in entrepreneurial companies because the hierarchies of these big companies are oppressive. So see this as an opportunity for you to provide great value to the employees. And about training, the last point I want to say that, see, at any stage, by the way, we all know that learning is not equal to training, and learning is nothing to do with what happens formally. It happens a lot on the job. It happens a lot on who you observe and what you get to see, and how do you reflect on what you do, and how do you internalize that and make it into a learning. That opportunity is enormous in your startup, and convert that into reflection sessions. Be the role model of learning. You will create more powerful learning opportunities for your employees than they do. So I don't want to say anything at ISB or Harvard. That will wait. It can happen, but they don't miss the opportunity of teaching and learning in the context of what you are doing. So these are some of my ideas about how might you make yourself an attractive employer.
Great. Spoken like a true advocate of a human capital. I really appreciate it. Yeah. By the way, the audience can share their questions, and I'm keeping a watch on the time. We may have another 12 minutes. You can actually keep rolling them, and I will keep a watch on that, and I'll field those questions on your behalf. Kind of switching gears, Vijay, not necessarily going in any particular order here, but a relevant question in the current day. With the proliferation of so many EdTech startups and the seemingly funding winter that's lurking, that's already there, you see quite a few exciting startups that are doing some impressive work, right? And for various reasons, not able to find the requisite funding in a timely manner. I actually see this as a great opportunity for companies to really scout for those opportunities and see if they complement to what they actually do already. Given that, what's your take? And I mean, you can speak on behalf of NIIT as well. I do believe there are great opportunities out there.
No, I think you have a very valid point, because there are many great ideas which see the light of the day but are not able to scale for a variety of reasons. There are many great products which are maybe little out of phase with time, and they are a bit early and therefore require patient capital. And similarly, there are opportunities of this kind. And at NIIT, we have always believed that each one of those ideas are worth their weight in gold, and they need to see the light of the day. So I don't know how many of you know, but over the last 20 odd years, definitely, there have been 12 such, about a dozen such ideas that we actually then provided capital either by going through a full acquisition or by getting into minority investments, and we got those ideas going, and they have actually got integrated into the NIIT strategy also. So we have a very well documented plan for inorganic growth. In the last 2 years itself, I think we have committed nearly 200 crores, and of which most of it is now spent. And we have a war chest of another 1,200 odd crores. So we are always looking for good ideas, good possibilities, and especially when you have times like this, the funding winter that is being talked about, I think that's a time when some of these great ideas also get valued at a level at which they deserve to be valued, right? And value is in the eyes of the beholder, obviously. But in this particular case, there is something called a right valuation. And I think, therefore, at a right value, there is an opportunity to have inorganic growth, which is truly beneficial to both sides. It's a win-win situation. And I'm sorry, but I'm belaboring my physics, chemistry, math, that we use the same equation when we go for inorganic. Will 1 + 1 create a 3? That's the physics. The math, will this actually create an ROI for both sides? And chemistry is whether the two teams will be able to function together. And very often the physics and math are right. Chemistry is the one that we have to really work on, and Chandra talked about that as well. And I think if all these things work out, then 1 + 1 is not 3, 1 + 1 actually becomes 11. And we've seen that happening. So we look for such opportunities.
Yeah, absolutely. And now that I'm speaking on behalf of NIIT, but platform like NIIT, one should not look at it as more of a an entity that has access to capital. I think the platform such as NIIT will have access to the reach as well, and the resources that will help you, potentially try your product in 10 different ways and get to that product market fit sooner, and so on and so forth. So I think I'm glad that you have that as your integral part of your strategy, and I'm sure there are some great EdTech startups out there that might complement what you're doing. So moving on to the next question, Ashwin, again, I think you briefly touched upon this, but I want to impress upon this question one more time. That is again more to do with product market fit and product channel fit, right? And so I think you did mention your views on those two, but this is more about chronology. So some people focus too much on trying 10 different channels, and let me do a digital marketing. Let me do alliance affiliate driven marketing, or let me actually have a feet on the street, guys. So they are experimenting too much too soon on customer acquisition using all kinds of channels. There are some who are like pivoting 10 ways to Sunday, trying to get a product and without really understanding the customer and the channel efficacy or affinity. So if you were to sort of give some sort of guidance, what is the focus area for a startup that is starting out, and does this focus area change as we go along? If so, what triggers that change of focus? Mostly around the product and distribution I'm alluding to.
Look, I think the thing I would say is first figure product and then try and figure distribution, versus trying to figure out both necessarily together, or distribution first and then product, right? And in many cases, when you figure, the good thing about education, Ravi, is you actually have real people, whether it's parents or students, that you can go and talk to. And it's actually a very heartwarming thing to do, because I think, like most people on this panel, right, there is a mission behind why we do what we do. Right? And for me, it is about making high quality education accessible and affordable. Not everybody can get into a top institution. Not everybody can afford it. Not everybody can learn in English. Not everybody can afford a full-time program. And so when you're mission oriented, it's really easy. In fact, in some ways, it's kind of makes you excited to go talk to the student and say, look, how did you get to know this program? Why are you doing this program? Did you like it? What do you like, etc. In many cases, if you get your product right, education is a high word of mouth service. I won't even call it a product, but yes, it is a product, generically speaking. And you will build some virality around it. So actually, more than just the channel, the first thing I will look at is there a word of mouth? Is there virality around what you're developing and what you're delivering? Now, thereafter, once you have a certain bunch of paying students, and I say paying students because free students, there's also a big debate about freemium. Can you just give free courses, get a lot of students, and somehow you'll monetize them? I think that's a bit of a pipe dream. But once you have these paying students, which means they're actually kind of committing to the education, then through that you can figure out how they found out and grow your distribution. Right, and look, for every channel, every type of business, this will be very different, right? Higher ed versus test prep versus K-12. Even in K-12, you have curricular, co-curricular, extracurricular. You have somebody sitting in India, like the old tutor Vista model, but teaching for the world, right? And then you have app-based products, etc. So each of these, the answer and distribution will be different. But I really focus on, and I think at a founding team, entrepreneurs' focus should be just on product, right? The service, the education, and measuring of the happiness, whether it's NPS, whether it's learning outcomes. The rest of it actually will follow. Because again, when you look at a market like India, it's so large, it's highly fragmented, that there are enough ways to maneuver and build that S-curve that can scale. But that, in some sense, putting it differently, 0 to 1 is the tougher part. 1 to 10, 10 to 100, and thereafter is actually easier because the market is so large.
Yeah, absolutely. I will stick to you, Ashwin. I'll have one other question for you, and then we'll move on to Chandra. I come from e-commerce space, and and every business, we all watch for certain key metrics, right? In e-commerce, transaction per customer, speed of delivery, or it could be a GMV of a particular category or a contribution margin if you go one level below. They are key metrics. So what would be those business defining metrics for an EdTech startup, right? You've run it so well for so long. I'm sure you pivoted 10 different ways, finally arrived at certain metrics that you believe are sacrosanct, right? What would be those metrics, and what is that North Star metric for your company?
Yeah, like actually 7 metrics also is too many, Ravi. We have one North Star, means there's one North Star. No, there are no 7. Saptarishi nahi, one North Star. So for us, it is completion rate. Okay, now it is not a perfect metric, but I'd rather have one kind of perfect metric versus many so-called perfect metrics. What I mean by that is, if I know that somebody has come into a course and over a 6-month, 9-month, or 2-year period, irrespective of the duration of the course, that they have endured the course and they have had the commitment to finish it. And in our courses, finishing means you have to get a passing grade, and that's usually 70% of the total grade. Then it tells me many things about the course. A, this course was delivering value. B, the course was relevant to them, right? C, that whatever the instructional design element also had a motivational design element that somebody could go through. Despite your work pressure, maybe family issues, etc., right? Financing issues, whatever it is, you were still able to keep up and finish. So completion is a good proxy. Okay. Now, yes, you can add many more proxies. You can look at weekly ratings, you can look at NPS, you can look at career outcomes, etc. But completion in a nice way captures it. Because your weekly rating starts falling down, actually your completion will also fall. If people are not seeing industry relevant curriculum, etc., then how will they get the career outcome? Most likely they won't complete, etc. So I would look at completion. And one nuance on that is, we always had a debate saying, oh, maybe when a student pays for something themselves, obviously, just to get the value of the money, they will complete. So we did an analysis in our courses, even on completion, where a company has sponsored a student to some of our courses. And what was heartening, and this is why I say you have to go back to product market fit, is that the completion was comparable to when a student was paying for it themselves, right? And that makes me feel good that, yes, we have a product or a service that is actually valuable and actually hitting the learning outcomes that the student desires.
Absolutely. I fundamentally believe it's a no-brainer. You got to get your product market fit first before you do anything else. I don't think there's any debate, but you nailed it. You said it emphatically, and you're a practitioner as well. So one last question, keeping a watch on the time. Chandra, you'll have to wear a different hat now. You actually represent the offline world, the conventional learning system. You're a professor at a very highly reputed university. How do the universities how do universities see this proliferation of EdTech startups, and what do they see themselves at Confid? They actually see this as a synergistic opportunity? They leverage each other. If so, what are those synergies or leverages from your vantage point?
Yeah, that's a great question. So to be honest, in the beginning, for some time, everyone sees them as a threat and says that will our people go away. But as you settle down and understand what's happening, you realize that, much like I said, there are courses, there are learning areas that lend themselves better to offline learning, in-campus learning, peer-led learning, facilitated learning, experiential learning. There are a number of pedagogical advantages that can be driven in the physical settings when people come together and the chemistry we are talking about happens. Some of it cannot be easily replicated, however bright the technology is. But the access of EdTech is certainly very, very high. So what would happen is that the more foresighted among the both sides of the coin will, as I say, some will understand there has to be education in technology, and then some understand there should be technology in education. And at the interplay, we will probably adopt more offline models, will create digital courses that lend themselves to such teaching, and compete with EdTech, with our brand and our presence and our impact. At the same time, EdTech companies would also, much like it happened in the retail world. So the e-commerce world is creating physical stores are creating e-commerce offerings. The same blended offering will happen. The net outcome is good. Learners will have more opportunities.
Absolutely, very, very well said. That the e-commerce analogy is very apt. Gentlemen, we are running out of time, and we could go on and on with, especially with this eclectic panel, and very, very insightful inputs, and hopefully the participants can take something back home as they're working on their startups. And thank you, gentlemen. Appreciate your time, and wonderful engaging with you.
Thank you.
Thank you.
Thank you.
Thank you very much.
Yeah.
Great chatting with you guys and listening to you.
Yeah.
Thank you.
Yeah.